Have you ever wondered why some stocks seem to dance around certain price levels, swinging back and forth like a pendulum in an old grandfather clock? Hi, I'm April of Coag Trade, and in this video, we shall review how this puzzling performance is merely the volatile nature of the stock market, choreographed by the elusive principle of support and resistance. In other words, my friends, it's the mysterious dance of supply and demand in the stock market. Now, imagine a floor below your feet. That's your support. And a ceiling above your head. That's your resistance. In the grand theater of the stock market, support and resistance are our lead dancers, setting the stage for a riveting performance. Support, my dear friends, is the price level where a stock usually stops falling. It's like a trusty floor that catches the stock, preventing it from plummeting into the abyss. On the other hand, resistance is the level where a stock usually stops rising. It's like a stubborn ceiling, halting the stock's skyward flight, saying enough is enough. These two levels play a crucial role in the decision-making process of most traders. When the stock price dances towards the floor, the support level, traders see it as an opportunity to buy. It's like grabbing a prized artifact at a discount store. Conversely, when the stock price pirouettes towards the ceiling, the resistance level, traders often decide to sell. They perceive it as the peak of the performance, a chance to take a bow and exit the stage with profits in their pockets. So, the next time you see a stock dancing between two price levels, remember, it's not just a random jig. It's the choreographed dance of support and resistance. Now, you might be wondering, how does one profit from this dance? The secret lies in the rhythm. Traders purchase stock at the tune of the support levels and make their exit at the crescendo of the resistance levels. To safeguard against the unexpected twists and turns of the market, they set stop-loss orders just below the support or just above the resistance. It's all about knowing when to step in, step out, and above all, when to step aside. And there you have it, the art of making money by dancing with the rhythm of the stock market. Here we have Apple dancing between the support and resistance levels as indicated in red and green. This is the weekly chart. The box up at the top represents the ceiling of the price action at $180 about a year ago in 2022. And in this year, in 2023, the ceiling rose to approximately $197. The prior support level was at $160. If this current downtrend continues on, it will possibly find support at $160. If it breaks that level of support, it possibly will go down to this next level of support at approximately $145. And then finally, the lowest support level possibly would be approximately $125 to $130. So that's how you would trade. You would enter in with a long position at one of the support levels. So you'd wait for the price to finally rest and then bounce off of one of the support levels, the 160, the 145, or the 130. Or, in the alternative, you can short the stock at the ceiling, the levels of resistance at the $180 position. But before we see that the level of resistance was broken in April. So once it is broken, then sometimes it becomes a level of support. However, as we see here in the chart, support level was broken. So it's going down to the next level, which would be, if you go over to your left, you will see that there's a support level at 160, at 170. It's already broken the support level at 170, but it did not close under one. Well, yes, it did. It had 1 week that closed under 170. So more than likely it will continue to fall. You have to wait and see. Some use trend lines. They would place the trend line at the trowel of each one of these waves. And there you have it. That way, you will either enter long at 160 if there's confirmation that the price action is continuing to go back up to retest the ceiling at 200 and see if it can break it. Trading is all about boundaries and checking to see whether boundaries can be broken or not. So they test to see, knock once, knock twice to see if it will break, and then if it doesn't, then the price action turns around. There's a failure there. So that's how you would profit from support and resistance trading. Hey, if you'd like to see more videos like the same one that you're viewing today, please hit the like and the subscribe button. This way, I will know that you want more and more of these types of videos. Thank you.